Good morning, everybody. It's Monday, June the 1st, so here's what's on the market's agenda. Nvidia's taking another run at the PC market. Macron's charm offensive, well, it's winning a Softbank investment for France. And oil is up again as US-Iran talks seem to be stuck.
OK, let's talk about these markets. I've been off for a week. I'm not sure that much has changed, to be honest. We seem to be where we were a week ago. Brent is up a little bit this morning. That's the only thing that really stands out. It had been fading towards the back end of last week. Elsewhere, futures are fairly static. You've got US futures up a little bit, European futures down a bit. Euro-dollar barely budging, despite the fact that Isabel Schnabel at the ECB is talking about rate hikes. The countdown to the opening trade starts right now.
So Nvidia's Jensen Huang pouring more fuel on the fire of the AI trade as if it was needed, talking up the demand picture, seeing incredibly strong demand once again, talking about the fact that the Vera Rubin GPU will start full production in Q3. The likes of OpenAI, Anthropic will be using that chip alongside SpaceX. Think of IPOs, of course, tying into that story. And then, as Anna was saying, pushing into the PC market with, in and of itself, would be a major story. And this is another push. So Jensen Huang, again, putting more of a catalyst around the AI trade. Good news for Asia, good news for the Nasdaq 100 futures pointing higher. Europe, though, left in the shade for now.
So where do we leave the AI debate after this? Where are we in this kind of story? Because everything I read over the weekend, the AI bubble debate is absolutely raging right now. You've got arguments on both sides. Which one stacks up the most? It's really hard to say. But it does feel as if, actually, normally you'd say, well, it's going to sort of meet somewhere in the middle. Will it? Is it going to be one extreme outcome, i.e. we rocket higher from here, or do we crash down to earth with an almighty thud? It feels like it's one of those two, but calling it right now, almost impossible.
Yeah, we have a couple of guests, actually, with interesting views on that subject, and whether there's value to be found in the tech sector at these kinds of levels, because we're at records in South Korea, record in Taiwan, record in Japan. Softbank up by 10% in just today's session at one point. That's on the back of just the overall excitement and what they're doing. We'll come to the Softbank story in just a moment. But interesting, the things that Nvidia was saying about going into PCs, because this is a place where they operated for a long time. The story around Nvidia has been so different for so long. But now is this sort of trying to shore up some kind of competition with Intel. It seems they're aiming very much at a very advanced market here, but keeping those laptops really thin with some high power seems to be the aim. So it's good news for ARM. The architecture will be built on ARM architecture. The chips will be built on ARM architecture. That ties us back to the Softbank story. Knows 90% of that UK-based company, of course. It's a reminder of just the supply chain grip that Nvidia has. It's a reminder of the closeness and the leverage they have over their customers. And it's a reminder of just how they are bending the ecosystem to their will. And, of course, they have the balance sheet to do this. So this is a GPU, CPU and the networking on the laptop, on device, with that energy efficiency, which means they can be thinner but more powerful. And coming later this year. And if anybody is worried about the sustainability of their jobs, it's OK, because Jensen Huang's been saying it's an absolute nonsense. The AI is going to cause unemployment. And so for all the lower value human capital around this desk and elsewhere, that makes us feel better.
It's lovely to have you back.
Sure, that's directed at me, not you.
I think that was just humanity in general.
But it's interesting, he's also talking about these chips taking people's... But he's also, at the same breath, almost saying, we're building these things to sort of do the tasks that humans are doing.
Yeah, he says AGI is here.
So which one is it? Is it we're building AGI and we're going to take your jobs, or don't worry about it, we're not going to take your jobs?
Is it just that we'll be greater with AGI alongside us? Is that the dream?
I'm just surprised the guy, Johnson, wasn't invited to the $1 trillion banquet. Did you see that he held in Taipei with the Taiwanese bosses of chip companies there, and he held this $1 trillion banquet, is what the local press were describing it as he sat down with the likes of TSMC, MediaTek and others for a dinner to discuss their plans.
Sounds like something you'd have at Versailles, I would have thought, would be the logical place.
Maybe that's
well, there's some logic.
If you're going to build a data centre in Europe, you probably want to build it in France. Probably the most stable power, probably the cheapest power, probably the most connectable power that you have on the continent, because it's definitely a struggle for all those things elsewhere. And it now looks as if we are going to see an announcement later today. It's going to happen very shortly. The Softbank is going to be building huge data centres in France, 75 billion. Are these going to get built? I don't know. That is the debate at the moment. Costs are rocketing if you're going to build data centres. the cost of them seems to change on a daily basis and only seems to go up. So there's all kinds of costs involved. Softbank clearly sees that there is an opportunity in Europe to do this, but there are going to be challenges. You're going to have to raise an awful lot of debt to be able to do this. But it does, if you are going to do it, France is the place to do it. So Emmanuel Macron feels like he's pushing on an open door.
Yes, and our reporting seems to credit him and his personal relationship with Macron and the way he has personally gone out to target this and to get this investment for France. And a lot of focus on this sovereign AI theme, because even Macron saying, you know, we do a lot of deals with companies. We talk to companies a lot of the time. It was interesting to get an approach directly from a head of state, which seems to be what got this over the line.
And that spending commitment is another potential driver of demand for chips, of course, because those data centres will have to be stacked with AMD and with NVIDIA's chips. But it does talk to the leadership being taken in France, and it does talk to that energy mix as well, and maybe a lesson for other governments around the world looking to build that infrastructure. And clearly France is, to your point, in Europe now leading on this.
There is a lack of kind of detail on how you finance these things. We'll just park that to one side for a moment, and how it's going to get built and where it's going to build and over what timeline it's going to get built. And there are plenty of data centres at the moment that have been committed that haven't been built. And Softbank is a classic case. In the States, it's been very slow to build the data centres that it has committed to do so.
It is interesting on that question of energy, some of the Bloomberg credit analysis suggesting that they have the money to do this particular investment because they've got an IPO of SB Energy. This is Softbank. That particular IPO coming up, which is in the renewable space, and they're going to use some of that money, it would seem, to help them fund this particular rollout. Shall we go back to the Middle East? So we've talked about equities, which in Asia and the US seem to be very focused on the AI story. In Europe, there is maybe more room to be focused on the energy story in the European equity session, and certainly bond markets are still focused on the energy story. So what have we learned? Well, we haven't made a huge amount of progress towards any kind of agreement. There's been trading of messages around an agreement. We had President Trump in the Situation Room on Friday, as you know, Tom, and we thought that maybe a deal was coming. But over the weekend, we have heard very little on that front. The US has conducted what it calls some self-defense measures against Iranian radar and Iranian drone activity. The Iranians say they'll target unspecified air bases in response to this US aggression. But this is all the small-scale stuff that we've seen over the last week, and it hasn't really moved the dial. But in the absence of progress, oil has gone a little higher.
Because we're drawing down inventories, we're getting towards the bottom of the barrel. That at some point is going to be a concern. The Chevron story last week I thought was interesting, and as much as Mike Worth was talking about the fact that we are going to see significantly higher prices as we work our way through the summer. So all of this kind of headline noise is going on. Actually, I'm not sure there's sort of that much noise, but things are kind of changing. On a Friday, we get a comment from Trump. We go into the weekend. On Monday morning, we're a bit more circumspect. But we're trading headlines, and we are basically where we were, and we're basically where we are. But we continue to have a Strait of Hormuz that is closed.
Brent is up 2.4% in the session. It's at $93 a barrel. It's still down 20% in the last month. Over the month of May, it was down 20%. Goldman Sachs putting out some analysis, which I think was interesting. We may have the full screen quote for you. We see significant upside price risks from potentially more persistent Middle East supply losses. That is expected. This is what really stood out to me. Also, meaningful price downside from weaker demand. Actual end-use oil demand may have fallen more in response to higher prices than expected.
And pointing the finger at China and pointing the finger at Europe, where we're starting to see economic contraction becoming a reality, despite the fact that we're maybe going to see the ECB hiking rates as a result of the inflation that comes from this. So, yeah, it is a two-sided trade at the moment. But you come back to this idea that if you want to manage kind of elasticity, one of the ways you can do that is with inventories. And we've done that so far. And now you're in a situation where maybe you're going to struggle because that inventory drawdown is coming to an end. So what happens at the end of that process? Are we going to go into a more inflationary period? And how much demand destruction are we going to see necessary to maybe balance that out? Let's talk about what we've got coming up on the show. We'll talk about all of this fixed income story with Lauréline Renaud-Chatelain, Pictet, fixed income strategist. Will Hobbs is going to be here a little bit later on. Brooks Macdonald, asset management CIO, and Anna Rosenberg, Amundi Asset Management's geopolitics head, will be joining us later in the programme.
OK, let's look ahead to what else we are watching throughout this week then. Today, Computex conference. We're getting the Jensen Huang speech, of course, that's wrapped up. And we've walked through that, and the conference officially gets underway tomorrow. This was essentially kicking things off today. US earnings with HP, that's after the market, so more in the hardware space with maybe some AI lift coming through for HP. Tuesday, Euro area May inflation data, and on Wednesday we got the OECD economic outlook, the Fed releasing its beige book, US earnings from Broadcom, again in the chip space aftermarket. And on Thursday, we get US initial jobless claims, which is the drum roll ahead of non-farm payrolls on Friday.
Looking forward to that. Expectation is that we're going to see a fairly strong number, that the US economy continues to remain in good shape. Let's talk about some of the news we also are watching this Monday morning. EasyJet apparently has drawn takeover interest from an investment firm, potentially shaking up the European airline market as it navigates high fuel costs and the steep competition we're seeing across the continent. Castelake said late Friday that it's considering a possible offer, while cautioning that no approach has been made to the airline's board and that it's possible that no offer will materialise. EasyJet has responded in the last few minutes saying that it will consider any proposal, but the board is mindful of valuation and deliverability. HSBC is redoubling efforts to revive its flagging Hong Kong investment banking franchise. Sources say CEO Hjort has sent tailored video messages to key clients across Greater China, while pressing executives to engage with roughly 400 major customers. To support the push, Bloomberg understands that HSBC has hired more than a dozen investment bankers for its China business over the last year. And the UK Prime Minister Keir Starmer will today be forced to publish hundreds of private exchanges between disgraced former ambassador Peter Mandelson and members of his government. Mandelson was ousted from his post as US ambassador to the United States by Starmer after a Bloomberg News investigation revealed his relationship with the paedophile financier Jeffrey Epstein was closer than previously known. It comes as the potential Labour leadership rival Andy Burnham leaves open the possibility of an early general election if he wins power. Which do you focus on in terms of the chaos that is currently raging through UK politics? Is it that first story? Like Starmer's on the way out. This is a postscript, isn't it? Or is it what Burnham does next and how that challenge is shaping up? Yeah,
it would seem that there'd be more at stake for Keir Starmer if we hadn't been through all of the Burnham drama of recent weeks. And that's still unfolding. That's still to play out. And you said if he wins that by-election, and that still is a really big if. I don't think we've had any polling for the last 6 days or so, but 6 days ago it had them almost neck and neck, Reform and Labour. So this is absolutely not a done deal that Andy Burnham returns to the House of Commons. So
June the 18th is the vote in Makerfield then, and the reporting around a potential early general election raises the question as to what is priced in terms of the political risk around gilts. So we've been discussing this with income guests, and a number of guests last week, and gilts have performed very well, in fact, in the last week or so. Outperform some of their counterparts, is that a lot is already priced in. Well, clearly calling a general election early, if that is what transpires, would potentially add additional political risk.
From the manifesto priced in, which is back to the conversation we've been having for the last few weeks.
What it implies, to my mind, is the fact that he believes that he is going to stray quite considerably from Starmer's manifesto. So in order to be able, therefore, to push his own manifesto, he needs a mandate to be able to back that up. So that would have to be the assumption around that. There's also this talk about Shabana Mahmood becoming the Chancellor, which I think is interesting too, and kind of how you would balance maybe the relationship with the market. She may be seen as a more stable kind of character to be able to lead the Treasury. Or do you keep Rachel Reeves in place, which is another debate that's raging as well. The financial markets, I suspect, will be much more focused as we get towards Makerfield with that latter point.
Yes, we've seen Shabana Mahmood mentioned. We've seen Rachel Reeves continuing mentioned, which I would have thought was unlikely a few weeks ago, but maybe things have
shifted. Seems to be becoming more likely.
But other names I've also seen in the mix as well, some of the more longer-serving members of the Labour Party. But 7:13 here in London. Coming up, Jay Powell speaks out after stepping down as Fed chair, warning of the threat to the central bank's credibility. We'll have more of his comments. Plus, we'll return to the AI story with Softbank's Masayoshi Son due to speak this morning with Emmanuel Macron, the French president, about a new €75 billion investment in France. Up next, we'll be joined by Viktor Hjort, who's global head of credit and equity derivative strategy at BNP Paribas. How is he navigating the European dimension to any of these stories? If you want to get involved in this conversation, please do. IB plus BPTV Go is the function to use this morning. It's early here in London. This is Bloomberg.
The cross-sectional bandwidth of Vera is off the charts. It's the first one to be PCI Express Gen 6. It is also the first one to have LPDDR5 with 1.2 terabytes per second. 2 to 3 times the bandwidth of the highest performance CPUs on the outside, 3 times the bandwidth on the inside. The bandwidth per core and the bandwidth period is world-class.
NVIDIA CEO Jensen Huang speaking in the run-up to the Computex conference in Taiwan. I mean, a lot of acronyms in there, Tom, but I get the impression it's better than the thing that came before.
Yeah, it's
that
quite
seems
good.
to be,
it's quite powerful,
it's not
the
bad.
Vera Rubin.
Yeah.
But it wasn't just the Vera Rubin. We've got the update as well in terms of this chip that's going to go into laptops and desktops, and they already have signed on Dell and Lenovo for this, so it's a renewed push by NVIDIA. The chip is called the RTX Spark Super Chip, and it combines a CPU, and it combines a GPU, and it combines networking, the kind of setup that you actually have on a data center, but compressed, obviously, for your laptop. So this is another potential significant revenue stream. It won't be as large as the GPUs into data centers, but not insignificant for NVIDIA.
Can I just come back? I think you make a really interesting point, which is I had no idea what he just said, OK? Not a clue. Lots of great numbers. As you say, it sounds fantastic. The market, I'm not sure the market understands it either. And we've gone from, why was Micron worth kind of a fraction of what it was just a few weeks ago, and now it's worth all this money up here?
Yeah.
What did the market miss back then, or what is it missing now?
Well, I suppose the revenues are real. There's concern about the cash flow at the moment, isn't
But
there?
why?
Because
But why
they're
did?
spending a lot as well.
We seem to be changing our valuation assumptions very, very quickly around some of this technology. Micron was worth a fraction, like, what are we up, 600% over the last few weeks? Why have we gone from pricing the market? Why are people buying it? And what is it that they're seeing that has changed so dramatically over the space of just a few weeks to change this valuation metric? And we're looking at this technology, we're trying to understand what it does and what the implications of it and what the cost is and all this kind of stuff. But I think the market's really struggling at the moment to figure out what it all means. Anyway, I think you make a really interesting point about all those numbers and all that stuff. I heard that. I had no idea what he's talking about. Anyway, Viktor Hjort's here to rescue us and help us.
Sure, Victor knows.
No, exactly what he's... Yeah, Global Head of Credit and Equity Derivatives Strategy at BNP Paribas. It's not an unreasonable point, though. We've gone from a market that was kind of tracking up when it came to the technology story, quite aggressively, but then we've gone parabolic with some of these stocks. Nobody's buying puts at the moment. Everybody's more worried about the upside calls at the moment. They want to protect the upside explosion, the potential for this kind of massive gap higher. How does the market look to you structurally, given that imbalance between puts and calls?
Yeah, I think, I mean, strategically, if you're in equities, you want to buy the dips in the market and you want to buy the dips in volatility where you get those opportunities. So I think, context for this conversation is that some of the earnings expectations have also started to go parabolic, right? So you look at something like Kospi, which I think is up 100% or so year to date. The earnings expectations are up 150% year to date. So in some ways, and in some parts at least, it's the market, the equity market, chasing the earnings expectations. So to the extent that there is froth, it's froth in earnings expectations, I would argue.
So it's the E that is. We don't know what the E is going to look like ultimately here. There's a lot of kind of circular financing going on. There's all kinds of other factors here. We don't know how many of these data centers are all going to be built, the expectation built in. So does the E just keep, does this expectation just keep growing? Kind of what happens next, I think, as you look at the patterns that are forming in front of you and the shape of the market in terms of the derivatives area in equities, what are you seeing, and what can you tell us about what you think is going to be coming from this?
Yeah, so there is the earnings element, which obviously is what's triggering a chase, and then there is the technical element, which is retail money. So retail money was completely absent in April when the market started to rally after the Middle East ceasefire, and that's sort of unlike last year's tariff situation where retail was really the thing that lifted equities after Liberation Day. So here you got a different situation. Retail missed out on an opportunity to buy. They're coming in late and they're going for what they naturally invest in, which is familiar tech stocks. So that wall of money enters the story quite late and now sitting on capital gains, and so therefore are feeling wealthy. And then we're going into a period here over the next 2 months where we're going to get a lot of IPOs, which is another potential source of volatility. So the earnings, the retail money, and the IPOs are all, I think, sort of sources of volatility, and I think for most people, volatility on the upside.
So when we get those IPOs then, Viktor, does the retail crowd double down on exposure to tech and add SpaceX, add Anthropic, add OpenAI? Or does it move money out of the places where it is now to buy into Elon Musk's vision and those of the other AI names I've mentioned?
So we think that there is, because retail is sitting on these gains and because they were late to the game, we think that there is probably more sources of funds there, but there is probably going to be some reallocation as well. What I think is interesting about the IPOs is that they're being designed in some ways to encourage retail participation, with higher allocations and with relatively small free floats compared to enormous market caps on the valuations. So I think retail participation in these IPOs are there by design, and will be really important for how they perform. And
this goes back to an earlier conversation about whether we're in bubble territory. You talk about the earnings justifying it and other things, retail being late to the party. But talking of parties, I mean, how much is this down to central banks and when they want to remove the punch bowl, or is that too much a conversation from the past and not relevant here?
I think it's the crucial issue, right? If you compare today's market with the late 1990s, which is quite fashionable, there are at least two things that are absent. So, one is the leverage, at least the corporate leverage. The US, hyperscalers are borrowing a lot. Everyone else is not borrowing a lot at all. And so, therefore, the average rise in corporate leverage is so far not there. And obviously, the Fed hasn't started to hike rates. And there is the episode of the late 90s where they did remove the emergency cuts from 1998, and the market was still able to carry on. But once they got into more restrictive territory in 2000, the market struggled. So I think that's absolutely the issue. Okay. So far, we're not there.
So that's the point the guy was making at the top of the show is that there's this continued gap between the energy story and the AI story, and does that close at some point? And you're suggesting that if things are derailed, if this equity market is to be derailed, it will be ultimately through the function of higher energy and the central bank response to that. Do you see that coming? Is that a moment that we need to start preparing for now?
I don't, I don't see the amber lights here quite yet, because, what you want to see in order for the Fed to get to the point where they really want to slow things down, you want to see the economy broaden out. So you don't like the K-shaped. You want the lower end of the K to start to move higher. And, in my credit world, you want to see companies outside of the hyperscaler space start issuing bonds and feeling that they also want to participate in the investment game. So far, we're not seeing that. If you look at industrials, if you look at consumer retail, there is not much leverage going on there, and there's not much investment going on there, which means that the tech space has the credit market all to themselves, if you like.
Okay. Viktor Hjort, thank you very much indeed. Global Head of Credit and Equity Derivatives Strategy at BNP Paribas. Really interesting in terms of the comments from Viktor there on credit. And obviously, we spent a lot of time thinking about private credit, the exposure to AI software. And Viktor actually thinks in his notes to us as well that disruption risk can be faded.
Well, it's interesting to keep reintroducing the Fed conversations. It feels as if it's been absent in the, oil and AI have been such dominant themes.
Coming up, markets pricing in growing inflation expectations then. We will be speaking with Pictet Wealth Management's Lauréline Renaud-Chatelain. Next, this is Bloomberg.
June, good morning. So much for sell in May and go away. The equity story in May was very, very strong. And in the United States, that continues this morning. Here in Europe, a little less so. We are lagging once again. FTSE's down by circa 0.5%. Elsewhere in Europe, 2/3% to the downside.
Last week, we saw bond markets trying to price in peace in the Middle East and doing that by sending yields down by 10, 15 basis points, depending on which of the developed market bond markets you were looking at. Today, we see something a little bit bit different. So pricing in a little bit more inflation fear once again. Oil prices up by nearly 2.75% on Brent. That's a 93 handle, so 93.63. And so yields are a little bit firmer this morning, up by around 3 basis points on some, the French and the German 10-year, I can see at least, Tom.
OK, let's dig a little deeper on that story then, the bond story, and bring in Lauréline Renaud-Chatelain, fixed income strategy lead at Pictet Wealth Management. Lauréline, good morning. As we think about this disconnect once again between AI and energy, with your lens on fixed income, are the bond markets giving us a clearer read, or at least a more accurate read, of the risk around energy and inflation?
Yeah, good morning. So it's a good comment on the fact that we had core PCE last week in the US, and one thing that really struck us is how information technology inflation is ballooning. And although this is a very small weight in the core PCE index, it is having a big impact. And you've seen also Fed members saying more and more that they're concerned that in the short term, all this AI investment is actually inflationary. We also see that chips are much more expensive than before, and that's pushing up also importing prices. And in this sense, there is some of worries that maybe in the long term, yes, it's disinflationary, but in the short term, that could boost core PCE inflation this year. And that actually has been already kind of priced in, I would say. When you look at short-term inflation expectation in the US, they are still higher than the long end.
If some of that is priced in, do you want to be getting exposure to parts of the yield curve at the front end? If there's been some pricing in at this point, where along the yield curve is potentially looking attractive to you?
Yeah, definitely. So our narrative has been that when you look at inflation expectation, or also at what is pricing for central bank, the market has been very aggressive in repricing policy rate higher this year, but also short-term inflation expectation. Now, that has moderated a bit, especially in Europe last week. We've seen a massive rally on one-year inflation swap, so they move almost from 4% to closer to 3.2%. But still, there is some juice there, as you mentioned. And so the part that we prefer, both in credit and in sovereign, is the short-term part of the curve. And that's where we see most room for a repricing if the Strait of Hormuz reopens and then the oil flow normalizes.
Lauréline, so we're watching what happens, of course, on the ground in the Middle East and the reopening of the Strait. Oil prices, in the meantime, have dropped considerably from the highs around the Iran conflict, of course. So then we're also watching what central banks do. I mean, the ECB's Isabel Schnabel, for example, giving some quite hawkish commentary, but she does that fairly often. But are you sensing a harder ECB line, harder ECB rhetoric on fighting inflation?
Yes, definitely. We've had, obviously, Schnabel last week, but other Fed ECB speakers, and they all hold the line that potentially an insurance hike is necessary in June, just to make sure that inflation expectations, both from consumer companies, remain well anchored. And in this sense, we have ECB's President Lagarde speaking this week, so we'll see if she's toning down that narrative or if she's endorsing it. But definitely the market now is moving into this expectation of a hike in June. I would say the big question to us is more, do they follow up with another one, maybe in September? The market is expecting 2 hikes from the European Central Bank this year. We expect only one, on the narrative that one will be enough, because then we'll see moderation in terms of economic growth. We have also wage growth that is really not of a concern in our view.
We'll get data on inflation out of the Eurozone this week as well, Lauréline. And you mentioned the PCE impact from the tech spending, from the AI rollout in the United States. How will that feed into Europe?
Yeah, so in Europe, as we know, they're not yet building a massive data center, although we have some news that maybe France could be one place where we could see some of them. So far, the focus in Europe will be much more on the energy impact, so both on the second run effect coming from that, the output price also from manufacturing, things like that. AI is not yet a story. And when we hear about the ECB, they are really concerned about these menu prices. So the fact that if you have input prices that go up, then at one point your consumer prices go up as well, because companies have to basically transfer this cost to the end consumer. And so far we haven't seen that, but it's something they're watching very closely. And so are we. So more on the consumer side in Europe, the focus.
Lauréline, good morning, it's Guy. Can I take you back to the energy story? You are at the point where you probably feel that there's a lot of speculation and you're being whipsawed on a day-to-day basis. Are you going to make the decision to buy the front end only when the Strait of Hormuz opens? Are you waiting for that certainty rather than kind of speculating on ifs and whens and buts?
So the good thing with the short end is that you get quite a good carry, especially if you look at the US or Europe. And it's a good carry with not too much duration. So you're not going to be way meaningfully impacted if yields go way higher. So that's why we have started to build up this position, especially in credit, high quality credit. That's a place where we like. And then what we focus is really the carry, the quality of the issuer behind that, mostly. And then the question that you are raising is more for duration. When are we going to add longer dated bonds? And at this stage, we're not ready to do that. We are underweight fixed income across the board with an overweight on liquidity because we want to keep this cash for opportunities, whether on equities or on bonds, once we have more clarity on the Strait of Hormuz.
OK, let's turn to the United States. Data out Friday, first Friday of the month. Last time payroll surprise to the upside. If you get another upside surprise this time round, how do you think that will affect Fed pricing?
Yeah, so probably the market now, we've seen this shift in narrative, right? Before, there was still this expectation that the Fed could wait and see and basically remain on hold for longer. The market has shifted to pricing some risk of hikes. So one hike is fully priced by March next year. So the narrative could shift into pricing a full rate hike for this year, for example. And so we know that the narrative around the employment vulnerabilities in the US has been one reason why most Fed members have not turned yet very hawkish, but that obviously can shift. And it will be very interesting to watch also the Fed speak after the employment report and see if that shifts their mind and if they're moving into more a neutral versus a hawkish bias rather than a neutral dovish bias.
OK, so that on non-farm payrolls and the potential impact on Friday, of course, with that data crossing. Lauréline, before we let you go, back to the credit space, what is the ability for the market to continue to absorb additional issuance when it comes to corporate credit?
I have to say that if you speak about high-quality corporate bonds, investment grade or very high-quality, high-yield, the ability for now is great. I mean, spreads are very tight, all issuance are overly subscribed. And when you see also hyperscaler have came this year with a lot of issuance, it has been very well taken. So for now, there is no concern. And I think one thing that is clear is that when you look at the overall USIG index, for example, the size and the share of the hyperscaler is very small. So you don't have lots of exposure to this theme. So that's why probably when you have new issuance, a lot of investors want to build this exposure because historically it hasn't been there. It's mostly banks that are the larger issuer in the USIG space.
Lauréline, great to catch up. Always appreciate your time. Thank you very much. Lauréline Renaud-Chatelain, fixed income strategy lead at Pictet Wealth Management. Talking of the Fed, a warning from the former chair.
If any administration finds a way to remove Fed officials over policy differences, then future administrations will do so as well. The public would lose faith that the central bank will make decisions based only on what's best for all Americans. The Fed's credibility would be lost. Credibility has been built and sustained over many decades, and we have a duty to safeguard that priceless asset for our fellow citizens and for generations to come.
Nice tucks. Former Fed Chair Jerome Powell used his first public comments since leaving the role there to talk about Fed independence. We're going to talk more about those challenges later in the show. This is Bloomberg.
Welcome back. This is the opening trade. It's Monday, but it is the 1st of June, so the start of a new month and a new week. We have European equity markets, though, looking fairly negative this morning, in contrast to what we see over in the States and in Asia. Asian equity markets touching new highs on various markets. US equity futures guy pointing higher. NASDAQ futures up by 0.5%. A lot of tech chat this morning. Europe, of course, focused more on the oil story, perhaps.
So that feels like it's the difference, doesn't it? Asia and the US focused on what is happening with the tech landscape. We're focused here on what is happening with the energy outlook, and that is the challenge that Europe faces, maybe some of the other regions of the world. Talking of which, oil is up this morning. The US says it conducted strikes on Iranian radar sites over the weekend. Washington and Tehran apparently exchanged diplomatic messages seeking changes to a draft agreement that would extend the ceasefire and open the Strait of Hormuz, which is still closed as we speak, partially closed. Paul Wallace, Bloomberg's managing editor for economy and government in the Middle East and Africa, joining us now. Paul, in the last week, we have seen oil prices coming down. On what, I still haven't quite figured out. How much should we believe in terms of the messaging coming out of the White House on the possibility of a deal getting done and the Strait being reopened?
Hi, Guy. I think you won't be the only one that is a bit confused by this. These talks are dragging on, and every time Trump or even the Iranian signal that something is close, we just don't get there. And of course, we had Trump on Friday saying that, he actually said himself that he would make a final determination, as he put it, before he went into a White House Situation Room meeting with his top advisors over Iran. Yet we're still not there yet. But I think the trend line, and this is why oil was down so heavily last week, with Brent down about 11% to roughly $93 a barrel. The trend line is towards the two sides reaching a deal. I think traders, with a lot of justification, have decided that Trump does not want to revert to war, that he needs a deal to somehow extricate himself and U.S. forces from this conflict that has sent energy prices soaring, that is increasingly unpopular with Americans, that has pushed up inflation globally. And the Iranians, too, they seem to, their messaging on the whole makes out that they also want a deal to end this war. But the two sides are still negotiating over the terms because it's very complicated. I mean, you talk about Hormuz. Hormuz itself is an issue because although the deal, the framework as we know it, will be basically a 60-day extension of the ceasefire, with Hormuz being reopened and the U.S. lifting a naval blockade of Iranian ports, we don't know if Iran has committed yet to free maritime traffic through the Strait. If it doesn't, then I think the U.S. is going to hold out, because it's hard to see Trump and the U.S. accepting a deal that reopens Hormuz, but not in a way that allows for free maritime traffic. There's also Lebanon, which is an issue. Iran wants a ceasefire there. Israel is reluctant to do that. And then there are also issues over Iran's nuclear program. So there are lots of details that I think are still being negotiated now, and that's why we're seeing the holdup.
And Paul, on the complexity of Lebanon, I mean, there is demonstrably no ceasefire now. In fact, Israel is pushing further into Lebanese territory. To what extent is that a risk as well in terms of derailing these potential talks, or these current talks and a potential deal?
I think you're exactly right. I mean, there's no way you can say that there's still a ceasefire in Lebanon with the scale of fighting that's going on, and the IDF now, further into Lebanon than it's been in about a quarter of a century, and they captured the Crusader-era Beaufort Castle over the weekend. So fighting there is intense, and it's devastating, swathes of southern Lebanon. But interestingly, Iran is not criticizing this ground invasion, at least in the sense of it potentially derailing the talks or scuppering them. It's not saying that. And in fact, there is some thinking that it's telling Hezbollah, which is a key ally of its, to up its intensity of attacks on the IDF and northern Israeli communities. So it is possible that, this war in Lebanon, devastating as it is for the people on the ground there, can kind of carry on without really hurting the US-Iran talks.
Paul, thanks very much. Thanks for the update. Paul Wallace, Bloomberg's managing editor for economy and government in the Middle East and Africa, joining us there from Dubai. Let's turn now to today's markets in 3 minutes on the opening trade with Ven Ram, cross-asset strategist for Bloomberg Markets Live. And he is, this week, right here in London. Ven, really nice to have you around this desk with us. So we were hearing there about everything that's happening in the Middle East, slow progress. The oil prices are watching that story. Bond markets are watching that story. Equities are arguably watching a completely different drama unfold, and that is around AI. And it all seems to be upside. US stocks, futures pointing again higher. Ven, what do you make of US stocks?
Morning, Anna. It's absolutely spot on. I think that the AI is the overpowering narrative. Now, if we had sat here in January, early January, thinking, what are the main drivers for this year, hardly anyone would have pointed to an escalation of Iran conflict to the point that we got to a war. And yet we got a war. And what happened? I mean, equities fell 10% from the top, and that's about it. And they shrugged it off. The point is, it was an unknown. And the equity markets shrugged it off. So if an unknown cannot spook the markets, what is going to spook the markets? And I do worry about that. My point is that, stocks are appearing increasingly invulnerable. And that in itself is a sign of, caution, right? Because, equity multiples have been stretched and you've got, there is no earnings recession in sight. So, but this froth is, the longer it continues, the more it sets us up towards a bubble. And that worries me a lot.
But we're not in a bubble yet. What are the chances of getting to a 5% US 10-year yield?
Well, I think that, if you look at a Fisher equation, Tom, so you've got your yields have got to be somewhere near nominal growth. You've got, real growth of 2.7% above trend, and you've got inflation running well above 2.5%. So what does it mean for the 10-year yield? It's got to be higher than 450, and I think 450 is not reasonably cheap or excessive in valuation. But if you look at the front end of the curve, we are doing 405, and that is excessively optimistic, right? I mean, the Fed has got to raise rates. You've got inflation, which is a big problem, and the Fed has been missing the inflation target for the better part of 5 years now. Yeah. So, you've got to raise rates, and 405 just doesn't cut it.
Ben, is there excessive optimism in the gilt markets? I'm looking at yields that have come in about 40 basis points since around middle of May. Gilts, the 10-year, the 2-year, they've rallied in the last 15 days or so.
I think they've rallied in conjunction with German bonds, and I think that some of it is justified because the Fed, the Bank of England, is not going to raise rates nearly as much as the markets are thinking. I've been saying for a long time that 410 is the level that the Bank of England will probably get to, because that's what the Taylor rule equation says. And the markets are pricing in 410 at the moment by the end of the year. But even so, I think that the 2-year yield at 420, 425 is not doing justice. I think you need to factor in the higher inflation, the persistence of inflation in the UK. And that persistence component suggests that yields need to be higher, not lower.
Does that mean that the market is overestimating hikes in Europe and underestimating the need for hikes in the US, Ven?
Yeah, absolutely. I think that, the markets are thinking, maybe there's a 50% chance that the Fed will raise rates. And I don't think, I think the markets are smoking something they shouldn't, because it's not happening. I mean, the Fed needs to raise rates because of the nominal and the real growth that we talked about.
We will certainly watch the politics. Ven, thank you very much. Ven Ram, cross-asset strategist for Bloomberg Markets Live. Remember, you can get up-to-date analysis and insight from Ben and the rest of the Markets Live team. MLI Vigo is the function, as always, on the Bloomberg terminal to get their contributions. Let's get individual stocks on the move this morning, or set to move. Chloe Melly has a rundown. Chloe.
Good morning, Anna. HSBC is going to be in focus today as it is trying to revive its investment banking business in Hong Kong. It is said to be hiring loads of bankers there and also sending top executives in the region to try and regain market share. And all of this is happening as it is facing intense competition in the Hong Kong IPO market. And some are saying that the setbacks faced by the bank in that region are due to some of the aggressive cost-cutting that the CEO has been pursuing in other regions like the US and Europe as well. And some analysts are saying, for example, that the downsizing has been quite difficult and that it might have hurt some of the competitive advantage that HSBC has. So that's definitely one in focus this morning. Moving on to another big UK name, and that is EasyJet, which this morning has said it hasn't had any discussions about a potential offer from Castelake, which is an investment firm that said on Friday that it was considering a potential offer. And EasyJet has said it is confident in its strategy going forward and that the offer was highly opportunistic because of the very depressed stock prices. We can see here that is definitely the case. It has been underperforming Ryanair, its closest rival, by quite a large margin. But we'll see how the market reacts this morning to this latest update on that potential offer. And finally, UMG, another M&A story, is in focus today. It has Universal Music Group has rejected an offer from Bill Ackman's Pershing Square, saying that the offer was not in the interest of either the shareholders or the artists that UMG represents. And so we'll be watching out for any update there and any reaction from the market on this.
Chloe, thank you. A bigger picture here in Europe, then, we'll be watching what happens with the oil majors as oil prices up by 3%. That could be an area of green, but most of Europe expected to be in...
It's interesting, London's expected to underperform today, despite the fact that actually maybe you've got those oil prices going higher, so it's not an oil-related story that's going to kind of affect that market. What other factors are going to be kind of in the mix on London?
Chipmakers in focus in terms of what we've heard from Jensen Huang, but also the commitments, investment commitments from Softbank. So Schneider Electric, Legrand over in France may have some skin in the game when it comes to the data centre story.
Yeah, they're working with with NVIDIA, I think, on some of that, with Softbank, on some of that data centre investment. So that's interesting. Continue to watch those oil prices then. Some of the latest lines coming through from Israel, just sending them a little bit higher in the last few minutes. Coming up, but on the opening trade, we will bring you the start of the European equity trading day. This is Bloomberg.
OK, welcome back. A couple of minutes to go until we start the new month, the new trades, 1st of June. Let's talk about what the back end of May looked like. May was incredibly strong, generally for US assets in particular, but for US assets in particular. Friday session looked a little bit like this. We went out there for Europe. We closed a little lower, so there's a little bit of downside. Maybe that's why we're seeing what we're seeing in futures this morning. But Europe feels like it's focused on the energy trade. The rest of the world definitely focused on the AI trade, Tom.
Yeah, European futures looking like they're left out in the shade, pointing lower by 0.3%. There was upside last week for the European stocks. You did end the week in positive territory, modestly, but today pointing lower by 0.3%. The FTSE 100 futures pointing lower by close to 54 points, not getting the lift from higher oil prices. Brent is up around 3% so far in the session. DAX futures over in Germany, of course, pointing lower by around 0.3%. We'll be watching energy, we'll be watching chips as well, of course, Anna.
Yeah, absolutely. We'll certainly watch chips. Let's have a look at some of the other individual stocks we'll watch. We'll start off with the chip story, though. What will the read across be from all that AI enthusiasm in the US? We see it in the futures. We see it in the session overnight over in Asia. The likes of SK Hynix and Samsung and Softbank all continuing the strength that we've seen of late. We've had lots of news lines out of NVIDIA, including a move back into PC markets, so we will certainly focus on the chip sector. EasyJet in focus on the back of what seems to be quite a lot of interest from Castelake. No firm conversations about any kind of takeover. That seems to be the line from both sides. But if we did see an offer from Castelake, it would have to be substantially higher than where the stock closed on Friday. So that is interesting for us to watch. And Roche is in focus as well. Roche moving its weight management drugs to phase 3. We will watch how that influences the market.
OK, the market. Let's talk about the market and figure out what the open is going to be looking like. The FTSE 100. Let's start there and see what's happening. We are expecting it to open a little softer this morning. We start off with an unch, a big green unch, so at least it's green. The expectation was that this would be a market this morning that would open a little softer, and maybe that's what we're going to see. So we're just ticking down a little bit. The expectation was that maybe we would see the FTSE 100 down by around circa 0.5%, and we're now beginning to edge in that direction, down by 0.2%. Elsewhere in Europe, we're expecting maybe a slightly more positive picture, but we are looking at very positive, well, no, I'd say very positive. We're looking at upside over in the United States. The tech trade is expected to drive the Nasdaq up by maybe another 0.5%. What are we seeing in terms of the sectors, Tom?
4 sectors currently in positive territory. Energy at the top of the list, gaining 1% on high oil prices, of course. The tech sector is playing that role. Renewed optimism coming through from Softbank's investments in France, but also what we're hearing from Jensen Huang in Taiwan. Tech up 0.8, just shy of 0.8%. Telecoms up 0.6 as well. And basic resources getting 5 sectors right now in positive territory. Utilities has just joined that pack. Very modest gains coming through there. On the downside. Biggest losses coming through for healthcare then. That sector's down 0.8. Media, which had been the leading gainer across your sectors on Friday, is currently amongst the biggest losers, down 0.7%. Anna.
Yes, I mean, don't have much to add in terms of the sector picture. It is a day where oil prices are up by 3%, and so energy stocks, quite understandably, go higher. And on the technology side, we were watching to see what read across there'd be, and broadly, we are stronger. Looking for what we'll have more on Schneider Electric in just a moment, but looking to see if there is read across from the Softbank story, the Nvidia story. Lots of positivity, of course, around that sector at the moment.
Nokia is gaining 3.6%, so they got the optics part of the business, and that's been a very...
That was down quite heavily on Friday, wasn't it?
That was possibly some profit-taking because the run-up in Nokia has been
extraordinary, yeah. So I think it was down quite hard Friday, so it's bouncing back a little bit this morning. Certainly not quite filling the gap towards the back end of the session that we saw. So on a two-day basis, that stock's still down by 3.5%. So it's interesting to see that was bouncing back. Where SAP was up on Friday after we saw some more positive news around what is happening in the SaaS sector. So quite a mixed picture coming through from technology this morning.
OK, let's get into a conversation about where these markets go next. Will Hobbs, Brooks Macdonald CIO, joins us on set here in London. Really nice to see you, Will. Thank you for coming in. We'll get to your thoughts on what's going on in the UK, because that's really interesting a little bit later on in the conversation. But thinking broadly about some of the themes we've been throwing around this morning, I mean, AI and AI optimism driving Asia, driving US stocks, US futures pointing higher as a result of that. But you're not necessarily convinced by the rate of adoption we're seeing for AI technology. So tell us how you invest in AI with that sort of hesitancy in mind.
Yeah, no, this is the question of the moment, isn't it, I think, Anna? And one of the things you've got is I've always got in my head that idea of the William Goatsman analysis that looking at bubbles in the past, they're much rarer than they might appear, and quite often when you find big stock surges, it's actually a step change in technology. And what these valuations bring is they suck in talent and capital to solve the problems at the frontier. You've still got this very jagged frontier in the capabilities of the latest generative AI. So that gives us question marks about where this could go. But ultimately, I think now you're still sort of trying to work out how to invest in the picks and shovels phase, which, you talked about all the memory stocks, these incredible earnings growth stories, and how now to look at the next phase, which gets us a bit into the UK, of how this impacts the knowledge economy and what are the big areas that it could change.
And so you think that actually maybe the market is too focused on the current winners from AI, and actually it should focus on the companies that are going to win from adoption?
It's not too surprising, though, in a way, because this is where the earnings growth stories are at the moment. I mean, the earnings upgrades for Korea alone, astounding. And so that's really backing the earnings growth. And what you're finding so far, and this is where we don't quite know the answers, is that demand is totally overwhelming plausible supply. That's conferring massive pricing power on the memory stocks and various other parts of the supply chain. How long that lasts for, we don't know. But in a way, yes, I think if you're thinking to the medium term, you've really got to think not just AI. There are a broader batch of technologies associated with the information revolution, which I think are mostly going to be deployed in the knowledge economy, hence the UK and various other areas. And that is some of the areas where you've got to think about some of the adopters of this new batch of communications and other technologies, how they might coalesce in surprising ways and change the rules of the game.
So will that suggest that you assume, or that you're seeing evidence that the adoption is worth the cost, that they're getting that return on investment? Are you seeing evidence for that?
Tom, that's a really interesting question, because so far we're looking at patchy evidence, and obviously everyone's trying to look at this, again, the problem you have a little bit is that while that frontier remains quite jagged, you have quite a lot of trouble seeing generative AI migrate out of sort of, relatively mundane tasks like generating paragraphs, where it's annoying but not disastrous if it hallucinates, further up the chain, and then you get into problems. But you are already seeing productivity statistics in the US pick up. That can't be generative AI, and that's already, the trend is higher. I think the trend is already higher in the UK if you use the right statistics on labour force growth. So in a sense, this predates, and that would not be too surprising. You've got machine learning, the generative AI forebear, already being deployed in quite widespread terms, and there's quite a lot of areas where that would be increasing productivity. Generative AI, if it comes off, could just be the cherry on top of that productivity trend already rising, if that makes sense.
Is there more upside in getting exposure to services that adopt AI or the industrial space, particularly as we think about physical AI and embedded AI?
My hunch is services, Tom. I think that's
because it happens more quickly, because it's easier to adopt because the gains are easier to accrue?
I don't think the gains will be easier to accrue necessarily, but I think in a sense this is the area where there is most to go for. The cake is potentially biggest. And that is where, if you look at manufacturing now, I mean, you're already operating dark factories in China where the lights never come on. How much more productivity can you get in that space particularly? There are areas and there are bits to squeeze, but it's the services sector, I think, where there are most jobs and not necessarily jobs at risk, but superpowers to confer on the various employees. And I think ultimately that means that what you may find in the services sector, particularly things like legal, financial services, is actually because your marginal cost to serve come down, more people get access to legal, financial and other services. The bottom end comes down as such, and so you get supercharged like that way.
During most of these booms, you need the cost to come down for wider adoption. The cost is going up, not down right now.
Yeah, no, that's very true. And I think that is why I would talk a little bit about, you know, I always think back to this, that amazing study by McKinsey, they were asked by AT&T, and you guys know this well, to look at the mobile phone market and where it would end up. And this was from the early 1980s. McKinsey, totally understandably, turned around and said, by the turn of the century, it's going to be about 900,000 phones worldwide. That was out by 100 times. And the reason for it was because from their vantage point, they thought these phones were ridiculously heavy. You could see that. The batteries were short. Coverage was wrong. So we just don't know which problems are going to melt away first to make our current forecasts incredibly wrong. But what we would say is that while you're getting, you know, all of this talent and capital sucked into the space, I think there's a good chance that some of these problems will be solved and costs do come down. You just don't quite know when. And so your diversified pitch is a sense a little bit.
But at the moment, the market's buying the picks and shovels, which are unbelievably expensive. And do they have to come... The inflation rate in the input cost side is the AI story is very expensive. And if you look at the cost of influence, we are effectively subsidising it because you can tell that because companies like Anthropic and things like that are losing money. So kind of...
Yeah, no. Whether this trade comes off or whether, you know, I do think that, you know, Damodaran talks about this a little bit, doesn't he? The sort of big market delusion. You've got 5 guys coming into a poker table. All of them think they're going to win big. There's going to be some disappointed people. So some of that infrastructure play, I don't think we have to bet hard that it's all going to come off. But to your point is you've got to see wider... We want to see wider adoption. How do we get costs down to generate that wider adoption? Because these guys have to make money to justify the investment that is being made. At some point...
Are we going to pay the higher price?
I don't think so necessarily.
So prices have to come down?
If prices have to come down, and if you look at the studies of the past, you tend to find that these technologies... They end up mostly going to the consumer, don't they? Either via the sort of consumer surplus or directly so. It's just the path to that point. But I'm not sure that you're going to find massive pricing, you know, because if you look at these models, at the moment they're not doing anything that much different from each other. There's not sort of one that's really standing out relative to the others. Therefore, how much pricing power can they have when it comes down the road? So I do think that some of this, there is going to be some disappointment in this area, but my bet is that the broader industrial revolution, the information revolution, that is going to mean a more broad-based kind of story in stock markets.
And part of that will be more productivity, and for that reason you don't think we need to worry as much as we do about debt levels in European economies, including the UK, where you say that the drama around gilts is quote-unquote hysterical. Explain your thinking.
No, it has been hysterical, I think, Anna, and that's been the case for some time, I think, in many ways. And, you know, some of that is down to, you know, the UK has had this kind of lull in economic growth. Some of that was down to the fact that we were at the epicenter of the great financial crisis and we were woozy as an economy for some time afterwards. But my sense is that that's been the wrong narrative for some time now, and actually that if you look at the trend in productivity growth, not taking the labour force survey, but taking the HMRC data plus some self-employed statistics, the growth in the labour force is less, therefore the trend in productivity is more. And if you assume, you know, many of the worries about the debt pile in the UK, for instance, are an assumption or an extrapolation that the growth of the last decade is all we're ever going to have. Therefore, yes, you worry about the debt. But if you go to, you know, your post-World War II, pre-GFC trend growth rate, then your debt to GDP disappears to zero in a space of 50 years if you don't need more of it. So I just think a lot of this is a bit of a red herring in a way, and that the UK has had way more debt to GDP in the past, and it hasn't been a problem. it's all about productivity growth. And the UK is big in the knowledge economy. We are a knowledge sector superpower, as you guys pay testament to.
That's nice of you to say so. Will.
Sure. Yes. You just wonder whether the AI is doing the jobs or we're doing the jobs. We'll park that thought.
I don't think someone's got to do a job, haven't they?
Let's hope so. Will Hobbs, Brooks Macdonald's CIO. Thank you very much indeed. Quick look at the core six. This is what we're looking like this morning, just to check out what is going on around Europe. As you can see, defence stocks are down. Some of the safer trades, like Nestle, are also softer. Luxury, a little higher, but look at Schneider, up by 2.5%. But let's cast our eyes upwards and figure out what is happening with EasyJet. Chloe Melley's got all the details.
Good morning, guys. EasyJet is seeing a huge boost this morning with shares up more than 11% after it said it hasn't had any discussion with the investment firm Castelake, which said on Friday was considering a potential deal for EasyJet. And so EasyJet has said that it is very confident in its strategy moving forward and that the timing of that approach was highly opportunistic given the struggling share price. And so we are seeing a huge boost in the shares this morning for EasyJet. Moving on to another sector that is in the green this morning, and that is data center equipment. And so we've got a couple of news there. We've got a big Softbank investment in French data centers and also Nvidia entering the PC market. And so there's a lot of optimism, a lot of positivity around that tech sector. And so this is really feeding through into those data center equipment firms, especially those French ones. So Legrand and Schneider Electric seeing a big boost this morning, but also other names in that sector like Siemens Energy also getting some of that boost. And moving on to Universal Music Group, which has rejected an offer from Bill Ackman's Pershing Square, and it is down as a result this morning about 1.6%. This is an approach that was already seen with quite a lot of skepticism and had received a lot of pushback from top shareholders, and so we're maybe at a bit of an impasse there, and that explains some of that weakness. And finally, let's end with more M&A, and we've got the Finnish company Hiab, which has bought the company Labrie Environmental Group, which is a truck maker, for about $1 billion. And so that is really boosting that stock this morning. It really gives it access to the North American recycling market. And so we are seeing shares up about 5% for that company this morning.
Chloe, thank you. Chloe Melley this Monday morning with the stocks that are moving. A bit of M&A activity then to talk about, either in terms of what we've heard confirmed or what is being much talked about. We'll get to that shortly. We'll also talk about some of the tech news. Coming up, Softbank makes a €75 billion bet on France. Could it become the new European epicenter of AI? That story is next. This is Bloomberg. Welcome back. This is Monday, the 1st of June, and European equity markets look pretty mixed, actually, which in itself is better than perhaps we'd anticipated. The futures picture was pretty dire earlier on, but US futures point higher. The Asia session has been positive, although all of that, though, has been focused very much on technology and AI enthusiasm. Here in Europe, the downdraft that you would expect from the higher oil prices we're seeing this morning is cushioned by, of course, Guy, energy stocks going higher, up by 1%, and a bit of technology and a bit of M&A.
Bit of energy, bit of... Yeah. Does energy feel like a net negative for Europe this morning rather than a positive? Kind of, yes, the energy stocks are higher, but is that what's weighing broadly on sentiment, maybe across Europe? Maybe it's just the fact that we closed a little bit lower than where the US... we closed a bit higher than where the US finished on Friday. Let's talk about one of the single stock stories that we're watching this morning. EasyJet shares are certainly flying a little higher this morning, as you can see. We're off our highs, but still up by 11.5%. The move comes after the airline's board called the overture, which we heard about late last week by the investment firm Castelake, quotes, highly opportunistic. This is the UK budget carrier, grapples with a depressed stock price, cautioning that attempting a takeover would be fraught with risk. Joining us now, Bloomberg Managing Editor for Space and Aviation, Benedict Campbell. Benny, good morning. Why is Castelake interested in EasyJet?
Well, EasyJet called it opportunistic, and if you look at the share price, that's one way to start. It's one of the weakest performing stocks so far this year. Before today, they were down by about a fifth, so that gives them an opening. And then if you look at the sort of the underlying assets of EasyJet, they're not that bad, certainly better than what the stock price might reflect. They have a very solid order book with Airbus. They have slots in popular slot-constrained airports. So we live in constrained aviation times, as you know. It's difficult to get good aircraft these days. It's difficult to get slots at good airports. So EasyJet has both of those things, and that's probably where Castelake sees an opening. So they think this is an undervalued asset, but it has valuable assets on the other side. So that's why they are considering making this bid.
And is this a business with experience of the aviation industry? What has Castelake's activity within aviation been to this point then, Benny?
I mean, Castelake is not a household name, but they do have considerable experience in the space. Notably, they made an appearance here a couple of years ago, partnering with Air France KLM for their bid for SAS. They eventually retreated, but they played a role in that. They are principally a sort of distressed type lender. They are a lender to Virgin, for instance. Not that that's a distressed asset, but they have some exposure here in the aviation space. What's important to note here, and this is something that EasyJet sort of alluded to, is there are considerable regulatory hurdles here. Castelake is a US asset, and EasyJet obviously is not. And by the rules that are governed over here, you cannot own, or the majority of an airline, if you are from a different jurisdiction. So Castelake could only own a minority stake in EasyJet, made more complicated by the fact that the founding Stelios company or owners still own 15%. So there are multiple issues around this. Castelake can't just sort of swoop in and take over the business. They would again have to come in with a partner or settle on a minority stake.
And Benny, you mentioned earlier that we are in this world of higher costs for airlines. How is and how has EasyJet been navigating that inflation push that you've been seeing across the sector?
Well, the company today came out and said they're confident in their strategy. They have an investment-grade sort of outlook. Their profit outlook is still positive. Investors take a slightly more dim view on this. As I said, the stock is down quite a bit. This is a company that, like every other company in the field, has really been hit by what's going on in the Middle East, the closure of the Strait of Hormuz, and the resulting increase in the fuel in the price of fuel. That's something that really has hurt the company. And again, this is where the opportunistic sort of approach comes in. This is probably a good time to look at an asset that is grappling with all these issues while at the same time still having a sort of strong foundation in terms of its business model, but also in terms of its assets. If anything, the sort of the budget space of the industry is probably the part that is going to come out of this stronger, because people will be more budget-minded as they travel going forward. So the likes of EasyJet, the likes of Wizz, the likes of Ryanair certainly are probably longer term going to be net beneficiaries. The question is, can they make it through to the other side without things like Castelake coming in?
OK, Bloomberg Managing Editor for Space and Aviation, Benedict Carmel. Benny, thank you. As we look at the EasyJet stock price up 12% so far in today's session. Let's get to the tech space right now, because Softbank has announced plans to invest as much as 75 billion euros in French data centres, making the country a top European hub for AI infrastructure. Let's bring in Peter Elstrom, then, Bloomberg's executive editor for global technology. Peter, so Softbank coming out with these plans. What are the details? They sound pretty sizable from a European perspective. What are the details, and will Softbank actually be able to execute these plans?
Yeah, there are enormous numbers for Europe in particular. I remember our reporters broke this story a few weeks ago. They wrote that Masayoshi Son and Softbank were going to come into France and they were going to invest billions and billions of dollars. And I remember we talked about the numbers and we're like, this can't be real. This seems too big for Europe in particular. But Softbank and Masayoshi Son have been making some very aggressive bets in AI. Son has done this throughout his career in different areas. He's had some enormous successes, including Alibaba. Right now, he's invested a huge amount of money into OpenAI in particular, more than $60 billion. It's really the biggest bet on OpenAI in terms of dollars, at least. And he's also talked about building $500 billion in data centers in the United States. So this is another enormous bet by him in France. It really came out of this meeting that he had with Emmanuel Macron back in March, where the two of them talked about this, and Macron appealed to him directly about trying to bring some of this AI investment into France. So they're talking about an investment, as you say, of up to 75 billion euros. They're beginning with construction up in the north of France, in Hauts-de-France, and they're going to begin. It is a very big bet. It looks like France is kind of emerging as one of the winners in the AI space.
So why is that?
Not only have the data centers, but they have Mistral, too.
Why France?
Well, I think in this case in particular, I think it's because of Macron's appeal, but I think also it helps that they've been taking AI very seriously in France. I think Mistral it's a small player on the global stage, but it's a quite successful player within Europe. And they're appealing, they got this investment from ASML, as we've talked about before. I think European companies like the idea that they're going to have a domestic player that will provide them with this AI technology so that they're not dependent on an OpenAI or an Anthropic, for that matter.
So we know why France wants this and wants the investment, Peter. But why is SoftBank making an investment into Europe more broadly? What is it that is at the core of this?
Well, Masayoshi Son has talked about in his conference calls in particular about how he wants to bet big on AI. He believes in AGI, artificial general intelligence in particular. I think for him, this is a nice chance to diversify his bets. As we wrote about recently, some people, even inside of SoftBank, have grown a bit concerned that his big bet on OpenAI is too concentrated. He's putting too much of his money on Sam Altman in particular. So it probably helps to not invest only in OpenAI, in AI models in particular, but also data centers. Again, he's investing this money in the United States, but he's diversifying a bit here. And in France, he's giving himself some opportunities to benefit from having data centers and other geographic areas in particular. And it's helped his stock. His stock was up about 14% today. He overtook Toyota as the most valuable company in Japan. That's a big deal for him.
Yeah,
That's very symbolic.
In 26 years, I think.
Yeah, Toyota is an icon of business there. Son is running the company. He's a first generation. He founded SoftBank, of course. And his ability to overtake Toyota, at least for today, is a good sign.
But briefly, Peter, anything from NVIDIA that stands out and what we've been hearing from Jensen?
Oh, yeah. Computex in Taiwan has a ton of news coming out of it. The biggest news probably out of NVIDIA and Jensen in particular is the fact that they're moving into the PC space. They want to compete in laptops with Intel and AMD in particular. Another expansion for Jensen Huang, probably good for the stock.
Okay, probably good for the stock, and we'll watch Intel. Watch Intel, we'll watch ARM, lots of other related, watching Schneider Electric go a little higher on the SoftBank story as well. Peter, thank you very much. Thanks for joining us. Peter Elstrom, Bloomberg's executive editor for global technology. Lots of technology themes to pick up on this morning. The other big theme in markets, though, still is, of course, what's happening in Iran. It's moving oil prices, coming up diplomatic exchanges between the US and Iran as Israel expands its ground assault in Lebanon. We will discuss with Anna Rosenberg, head of geopolitics at the Amundi Investment Institute. This is Bloomberg.
Happy Monday. It's June the 1st. This is the opening trade. We are 30 minutes into today's session. European stocks are down 0.2%, so not feeling the AI love, at least for now. That's been, of course, rippling through the Asian markets. US futures also on the front foot, with Nasdaq 100 futures pointing up by 0.4%. But again, Europe is not playing in that party right now, though some individual names are. Here in the UK, the FTSE 100 is actually down 0.3%, despite the uptick that we've seen in oil prices. The DAX in Germany is just nudging into positive territory with gains of just 14 or 15 points. And over in France, the CAC 40 is performing marginally better, just up 0.1%. Guy, what are you seeing?
OK, let's talk about the breadth and what is happening here. Basically, it's a 2-to-1 down versus up, 170 up, 418 down. Volume's a little on the light side, but not that. Well, actually, maybe it is. Maybe we are seeing a little bit of light volume. Europe doesn't feel like it's participating in the AI trade today. You've only got a few stocks that are benefiting there. Elsewhere, higher energy costs are weighing, though they are lifting some of the energy names. Let's talk about the gainers. Let's talk about the losers in this market this morning. EasyJet, the Castelake story, certainly one of the main drivers in the aviation sector. That stock is up by 11%. What is it the Castelake is looking at here? Is it the underlying assets? Hjort is a distribution company. It manages all kinds of distribution assets. It is looking or buying a industrial waste production vehicle producer got to get this right. Basically, trash carts, trash trucks, and that stock is up by 7% on that. Nokia's also rising quite nicely as well, though it did get. It was down on Friday. Today it's up. It's not fully kind of filling that gap this morning. On the downside, let's talk a little bit about what is happening there and give you an idea of what the picture looks like. Wise Group is the big loser on the downside. Elsewhere, I think it's a real struggle to figure out exactly kind of why some of these stocks are moving. Defence stocks generally are a little off this morning. Rolls is down. That's quite a heavyweight in terms of the downside. Roche is also down by 0.6%. Just a kind of a little bit of negativity in the pharma space. Plus a few kind of idiosyncratic stories, enough maybe just to suppress these European markets, Anna.
So those are the markets, Guy. Let's get up to date on some of the other stories we're covering then this morning. Berkshire Hathaway is to acquire Taylor Morrison Home in an all-cash deal worth about $6.8 billion. The deal is the first major purchase under Chief Executive Greg Abel and a vote of confidence in the U.S. housing market. The offer of $72.50 a share per common share represents a 24% premium to the house builder's latest closing price on Friday. Hungary's Prime Minister Peter Magyar says the country will amend the constitution to oust President Tamás Sulyok. The decision comes after Sulyok rejected Magyar's demand that he resign. Magyar, whose election victory ousted former Premier Viktor Orbán, had set a midnight Sunday deadline for Sulyok to leave. In a video response, Sulyok cited what he described as his allegiance to local and European constitutional norms that required him to stay on. Bloomberg has learned that the European Union is considering a temporary freeze to its price cap on Russian oil as the war in the Middle East continues into a fourth month. The current price threshold is $44.10 per barrel and is due for review later this summer, with options including suspending dynamic and automatic increases until the end of the year. Guy.
Let's turn attention back to what is happening with the oil story. Oil climbing from a 6-week low. The outlook for a peace deal to end the war in Iran becoming a little uncertain once again. We are oscillating on this story. Washington and Tehran traded messages apparently over the weekend seeking changes to a draft agreement that would extend the ceasefire and open the Strait of Hormuz. You got Iranian comments this morning on an operation that Tehran hopes it can manage with Oman in terms of managing that piece of water. A lot of uncertainty, but basically the oil market is assuming that a deal is going to get done. There's not much call buying, there's a lot of put buying. That seems to be the skew right now. Let's figure out what is happening here. Anthony De Paula, our Middle East energy markets reporter, joining us on the details. Anthony, that seems to be the picture. The oil market seems to believe that a deal is going to get done. What evidence do we have to back that idea up?
Good morning, Guy. Yeah, I mean, coming back to work this morning after the region has been off for most of last week due to the Eid holidays here, it looks like a lot has changed because we're down about $10 from where we were when we left, say, Friday over a week ago. And we're coming back up a little bit today, as you said, from that low on last Friday. And that's because we didn't see much movement on the deal over the weekend. The issue here is that traders are still waiting for clarity on an opening of the Strait of Hormuz and when that oil can start moving out, and vessels can start getting back into the Gulf. So we're still seeing oil at elevated prices, still up about a quarter from where it was before the conflict started, and that's because of this lack of flow of crude, natural gas, refined products out of the Persian Gulf. So until we see that open and until we see that flow restored, we won't see that price dropping back to those current levels. And it might take a number of months until that tanker flow can get started. So we do see this positive view in the market by the fact that we have really taken some heat out of the price over the past week. Some very positive pronouncements about a ceasefire extension, 60 days. So very detailed aspects of that, giving the market some confidence that there will be a deal. But we are just waiting for that final signature. And I don't think anyone is discounting the fact that there could be another flare-up. But we are seeing and taking the positivity of the potential for a deal, as we can see from the market right now, Guy.
OK, Anthony De Paula, thank you very much indeed, our Middle East energy Markets reporter with that update. Let's stay on topic and broaden out the conversation. Bring in Anna Rosenberg, head of geopolitics at the Amundi Investment Institute. Anna, so the oil markets to some extent as well, but certainly the equity markets are betting that there will be a deal. Are they right to do that?
I think they're very optimistic at this point in time. There may be a deal, there may be a muddy deal, but the issue is that the underlying issues won't be resolved because this is a highly complex situation. And we will not go back to the status quo ante, to how it was before the war started. Because even if there is a deal in which basically you get, both sides reopening the strait, ultimately you have various problems. Firstly, no one really knows who's actually in charge in Iran. There is a decentralized power structure going on. And this is why you're seeing these strange flare-ups of missile strikes, drone strikes happening at the same time as talks are taking place. Who is in charge? Is it the ones that are negotiating or is it the hardliners? So essentially this means that any commander controlling drones or missiles can veto any deal by disrupting the Strait of Hormuz, by disrupting the region. That's one of the big challenges. The second big challenge is that you have opposition forces still in the country, in Iraq, outside of the country, that are not happy with this regime. They want it out. And they will, at one point, try to weaken the regime again, together with Israel, who is also not happy. So that means that the regime will continue to find itself in a situation of instability and will lash out occasionally. So at best, you get a reopening, a partial reopening, but there's going to be a risk premium because they will create uncertainty. So that's the challenge that we have here.
Do you think the markets are therefore underestimating, particularly the domestic pressure that Trump is under from the right of his party, underestimating the risk that Trump will ultimately have to accelerate any further military response, that ultimately the only card he has left right now to get the kind of deal that he has promised he will get is to restart a military campaign against Iran?
Well, I mean, Trump right now only has bad options because restarting a military campaign could be a lot more chaotic than what it is already, right? You could see then a lot of disruption in the Gulf, which would put energy prices higher. So Trump is looking at this saying, OK, I get a deal, which is not great, or I restart military operations, which could be worse. So this is why Iran is having the upper hand. They're looking at this thinking, all right, we have time on our hand. We can play this. We can continue to ask for more and more and more because clearly the US is very keen on getting a deal. And we're going to try and extract as much concessions as we possibly can. The challenge is that Trump cannot accept some of these demands. And so we are in this back and forth and tit for tat, which makes it really difficult to get a deal over the line.
Are we right to talk about a deal, Anna, or should we just be talking about an extension of a ceasefire with things still to be decided in the future?
I think there are three scenarios. It's a comprehensive diplomatic solution, which is a very low likelihood. The second one, which is, when we talk about the deal, I think the only thing that's on the table, I call it a muddy deal, which is basically we both agree to disagree, but we reopen the strait. And then the third scenario is no deal. And in that no deal scenario, you have a military escalation, you have a status quo. Okay, so these are the scenarios on the table. Right now, we're still in this possibility of a muddy deal materializing. But it's tricky for Trump because it means at this point he needs to pay off Iran with a large upfront sum, which is very difficult for him to do domestically, politically. Then you have Israel, which is facing an election. This deal is not good. The terms of what we've seen is not good for Netanyahu facing an election because it puts him in a situation where potentially he has lost the war against Hezbollah and against Iran in an election year. That's why Israel is doubling down on Lebanon right now. This is a sign that we're not going to be okay with Lebanon being part of a deal with Iran. So these are two fundamental issues that make it difficult. On top of what I just outlined at the beginning, the decentralized power structure in Iran.
Yeah.
So even if there's an appetite to do a deal, you have a lot of challenges to resolve that.
Tell us more about what we know and don't know about the Iranian regime itself, because we see these lines coming through this morning from one particular spokesman saying Iran reiterates it has not negotiated on nuclear issues with the US. But do we take these comments at face value, or there are just so many voices speaking out from Iran that we can't be sure what has been said and by whom?
Well, I think that the negotiators are saying certain things, but then you have the hardline elements. We don't know. The Ayatollah, is he alive? Has anyone seen him? We don't know that yet. He's making comments that that Iran cannot give up the nuclear material. And frankly, when you look at this from a geopolitical perspective, you look at how Iran has been attacked. Giving up the nuclear material increases the risk of being reattacked. It would mean opening the doors to another attempt by the US, by Israel, to finish off the regime. So it's a huge risk for them to do that. The nuclear issue will not be solved as part of this deal. If at all, it will be kicked down the line to negotiate at a later point in time.
What sort of timeline are you thinking of? There is a big discussion in the oil industry about the fact that the tanks are getting empty. We're getting back, we're down to kind of the levels that we can't take much more out, that inventory is getting to zero. I don't know when we get to that point, but it feels like it's coming onto the horizon. It's becoming a reality very soon. So how long do you think it would even take to get to a muddy deal? Is it days, weeks, months?
I mean, we should have already gotten it. This should have happened a couple of weeks ago already, because, as I said, this deal is not going to be good and it will require difficult compromise. Should have happened. It's not happening. Why is it not happening? We keep on having these mixed messages. Well, because they're not agreeing, clearly. Because it's politically difficult. Because it's politically difficult for Trump to kind of face this into a position where he can claim a win. And he needs to claim a win on this. So I think they're trying to square the circle somehow. I've seen yesterday or the weekend there was some report about, instead of giving Iran upfront just unfreezing of billions, you call it an investment fund. I've even seen the idea to have some US-backed property investments in Tehran. Very creative. I think something like this could allow Trump to give Iran some money and claim it as a win. So we're seeing a lot of creativity here.
If I look at the other end of the kind of distribution of outcomes, if we do get the tank to the tank bottom and oil prices rise sharply, where do you think the pain point is that will force Trump to do something because gas prices in the States are too high?
I think the pain point is already here. It's an issue of this is not a sustainable situation. And he knows this. And this is why we're seeing so much appetite to try and do a deal, even though it's a bad deal. Okay? He knows that this is, it needs to be resolved. And I think this is why the markets are optimistic. They understand that. Trump, we're also kind of have this situation where they do a temporary deal, they don't solve any of the issues, kick them down the line, and then after the midterm elections, Trump revisits this whole issue. Because however you frame this, this is going to be unfinished business.
Do you think we can get through the midterms without this getting resolved?
I think something will give. I don't think we're going to be in the status quo.
Right, okay.
Just staying on the oil part of the story, but shifting our focus from Iran to what's happening in Russia, we've got some Bloomberg reporting about the number of Ukrainian attacks in the month of May on Russian infrastructure. Maybe that has more of a domestic impact than it does on international oil markets, given the sanctions and the energy caps. How are we thinking about Russia's position right now vis-à-vis Ukraine, and whether or not that does have more of an impact in terms of the energy markets as we look at the infrastructure damage in Russia right now?
Yeah, for Russia, this Middle East conflict is a hope or an optimism when they look at this from the degree that, firstly, they are benefiting from it financially, but secondly, it's putting pressure on Europe. And that means that we've just heard it, on the oil price cap. They are hoping that this will cause more political instability in Europe and lower the appetite in Europe to continue to support Ukraine. Because Russia is struggling on the battlefield increasingly. We are hearing made-up stories about battlefield successes on the Russian front. At the same time, Ukraine is striking deeper. Now we've seen drones on Romania. Europeans are getting a little worried that Russia is being increasingly in a corner and more willing to lash out. And so Russia is hoping that they're playing this long game where over time Europe is in a more difficult situation if the situation in the Middle East doesn't resolve itself, and more willing to ease all pressures from Russia. So clearly they're looking at this right now and think this may be an opening for Russia to take advantage of.
And we saw the US administration before the Iran conflict pretty engaged with trying to find a solution around Ukraine. Now we have the Iran conflict. And I just wonder about the bandwidth for the US administration right now, as we read over the weekend and last week and in the weeks just gone, in fact. More surveillance over Cuba. Is this the precursor for some sort of Venezuela activity over there? Lots of questions, at least, being asked about that. But do from a geopolitical perspective, this must raise questions with how much a US administration can deal with at one time.
Yeah, I think that Russia-Ukraine is not anymore top priority for the US at this point. It's a European problem. And when you look at how the funding has moved, it's now fully funded by the Europeans. And from the European point of view, the best strategy is to slowly bleed out militarily Russia over time by keeping the conflict more or less contained and by getting Russia to a point where they have to compromise. That's the strategy. I don't think we're going to get them to a ceasefire because neither Russia nor Ukraine are in a position where they have to. Now, to your question on the US, I think in the second part of this, the second half of this administration, we're going to see the US double down on Latin America. Cuba is clearly there. They want to reduce Chinese influence in Latin America. The Western Hemisphere more broadly, Greenland is still on the table, not militarily, but politically, absolutely. And of course, I think we've discussed Iran at length. This means that the US will have to stay somehow exposed to what's happening in the Middle East, because this is not easily solved.
Yeah, OK, so back to the Don Rowe doctrine, perhaps, in the second half of the presidency. Anna, thank you very much. Thank you for joining us. Anna Rosenberg, Head of Geopolitics at the Amundi Investment Institute. Coming up on the programme, plenty of tech themes in focus this morning. We'll get back to the Softbank story. It plans to invest as much as 75 billion euros to build AI facilities in France. We'll discuss that next. This is Bloomberg. Welcome back. This is the opening trade, 1st of June, and this is the picture across European equity markets. We're pretty flat, actually. We're flat on the DAX. We're flat on the CAC 40. The FTSE 100 providing a bit of the downside. Media stocks have been a little bit weaker today. Rolls-Royce, last time I checked, was a little bit weaker today. Stocks Europe 600 then down by around 0.25% overall. And we're waiting, Tom, for more news around what's going on in France, the enthusiasm for the French AI story. Softbank, Masayoshi-san, on the ground, on location in France, ready to make a big investment.
Yeah, and seemingly a pretty sizable win in terms of investment decisions and commitments for President Macron. So we're expecting to hear from the president alongside Masayoshi-san, of course, the head of Softbank, a company, by the way, which has seen its market value top Toyota in Japan. It's become the most valuable company, at least for today, of course. That's more about its investments in OpenAI than maybe the investments that it's pledging in France around data centres. So around 75 billion euros in terms of the data centre build that they're pledging for France, starting with about 40 billion. So in total, we're talking north of 80 billion US dollars. And to your point, Guy, earlier, partly this is down to the fact that President Macron has lent in himself personally, but also because of the nuclear energy and the relative cost advantage that France has on that front, which, of course, is such a necessary component.
When would this happen? I guess would be one of my questions. He's made big commitments in the States, and it's taken quite a while to build them.
Yeah.
Even if he broke ground today, how long would it actually take to get this stuff up?
There's
and
a
running?
date attached to about half of it, isn't there?
Yeah.
But no date attached to the other half, it would seem. What was it, 35 billion by 2031 is the way that this is being phased. So we'll see whether... But, you know, even that is quite a win in terms of investment in the AI story over in France. Interesting that we get also at the same time Salesforce announcing, we've got a big event obviously in France today around technology, but they're announcing a 2 billion investment. And that is to do with AI as well, just as the manufacturing PMI data comes in a little bit better than had been expected from France. And talking of data, we'll get plenty more data this week. Let's have a look at some of the other things we're watching this week. The Computex conference, we've talked about some of the lines from NVIDIA already in the preamble to that, but that kicks off in earnest tomorrow. US earnings are in focus with HP after market. We're also getting tomorrow inflation data out of the Eurozone. Then we start to move over to the States. The Fed releases its beige book on Wednesday. US earnings come in the shape of Broadcom. We get data culminating in non-farm payrolls come Friday.
Keep an eye on the ISM today. Keep an eye on the prices paid component of the ISM manufacturing data today, because it has
especially for tech.
It has been skyrocketing, which takes you back to the tech story. Let's discuss what's moving markets this morning. Scarlett's here, Scarlett Montgomery-Koenig from the MLive team. Let's talk about oil prices. We were just talking about it a few moments ago with our last guest. Oil prices are pricing in a very optimistic scenario.
Yeah, I mean, absolutely. If you look at the last 2 weeks, the market's just seized onto this idea that the Strait will open again. And the broad trend for Brent has just been downwards. That we're at levels on Brent that are kind of the lows we've seen in the past 2 months, or at least not far. We're bouncing a little bit today. But particularly when you look at options positioning, put open interest is the highest, or it reached the highest a week or so ago that it's been in over 18 years or something like that. And so there's clearly been this shift that everyone's very optimistic that there will be a deal.
Are we overestimating the impact that AI is having on growth? I mean, there's some evidence out of Taiwan. Growth is up about 10%. Exports out of Korea are soaring up about 50%. AI as a catalyst for driving macroeconomic growth globally. And that seems to be offsetting the concerns about the oil story right now.
Yeah, I mean, I think certainly it's a powerful growth driver, and we've seen that strongly in the U.S., but I think we need to be very mindful that that impact is felt unevenly. So yes, companies that have AI exposure will do quite well, but you also still have this energy impact. So if you look at world GDP forecasts, that's barely moved this year. You've had 70 basis points add to CPI forecasts, so people are very worried about inflation, but overall growth hasn't shifted in terms of expectations whatsoever. Now, part of that is certainly the AI story, and that's feeding positively into earnings, but that only impacts some companies. So I think when we're looking at the equity market, we need to be mindful of what's the tech exposure. So yes, you want to be exposed to stuff that has a higher tech weight, but also what's the energy exposure? Because my worry for some of these Asian equity markets is that they're big energy importers. So if you look at net energy imports as a percent of energy use for the likes of Taiwan and Korea, but maybe a clear is quite high, but maybe more of a clear short is something like Italy or Spain, where you have both a low tech weight in your MSCI index, as well as that big exposure to imported energy.
So talking there about the inflation dynamics, is that why we see bond and equity markets handling the uncertainty in oil prices quite differently? Equities trying to look through it entirely, whereas the bond market's quite focused still on those higher energy prices as we see them this morning.
Yeah, absolutely. I think it's the inflation focus, so this idea that we know we're going to get higher inflation numbers in the U.S. in particular, CPI at 4% this year. You know, that's quite worrying for a Fed. And when you have data coming in so strongly, as Guy mentioned at the beginning, ISM comes in today, prices paid is going to be quite high, it's expected. Prices paid, employment, new orders, the ISM number itself is all expected to rise today. And so if you have inflation that high, but activity is still very resilient in the background, then the Fed can focus on that inflation mandate more. And it means that you could firm up that hike and have a stronger yield. And I think that's the message that you're seeing, is that AI can contribute positively to growth and to inflation, whereas you're more looking at the inflation impact for the U.S. from an energy perspective.
Let's talk about that Fed hike. How hard will it be to get a wash Fed 2 hike at this point? How strong does the data need to be? How strong does the inflation narrative need to be to get that to happen?
Yeah, I think this is the struggle, is there is a hike price, but it's kind of seen this really long runway.
Yeah.
And, you know, when you compare it to what you've seen for the ECB or for the Bank of England, there's quite a lot priced positively. So I think, you know, maybe just a continuation of current trends with inflation really close to 4% is more worrying.
Skylar, thank you very much. Skylar Montgomery-Koning from the Markets Live team. That is it for this morning, for this Monday on the opening trade. The Pulse is up next. They'll continue to take you through some of these tech themes and, of course, everything out of the Middle East. This is Bloomberg.